Well, good to see you, Ronnie. It's been a while since we last chatted, and you've been doing a lot of work, obviously, continuing your work in impact investing, and we've been following your career for a long time. But for the viewers here who might not be familiar with your work, which I think that will be few of them, could you tell us a little bit about your journey in impact investing and what really brought you here?
Sure, Harlin, it's very nice to see you again. I started life as an Egyptian, really, and got kicked out of Egypt at the age of 11, came to Britain as a refugee, Harlin, as I know you know, and learnt English and went to a state school, which took me to Oxford University and then with a scholarship to Harvard. So I'd been helped throughout my career as a student. And then when I got into venture capital in my mid-20s and founded what became Apex Partners, I had a social purpose, perhaps because of my background in good part, but also because Oxford in the 60s was a very idealistic place. It was the era of flower power, and I felt I should make a social contribution as well as make money, which I needed to do in order to maintain the standard of living of my parents after their retirement, because they lost everything in Egypt. And so my career as a venture capitalist was founded on the premise that we would be creating jobs as well as making money. And as the years went by, and we backed entrepreneurs who came from very simple backgrounds, Harlin, as you well know, and they became rich and they enriched those around them and they helped the economy, I realized that the gap between rich and poor was just getting bigger and bigger, which is why at the age of 53, I said to my colleagues at Apex, which was by then a big venture capital and private equity firm, global firm, I'll be leaving 7 years from now to devote the next 20 years to trying to make a dent in social issues and in the Israeli-Palestinian conflict. My wife's Israeli, I was born in Egypt. I'm a British citizen. I felt I could play a role in that. And then, by luck, I got a phone call from the British government asking me to head up a task force on social investment, and that was in 2000. And they asked me to look at why governments hadn't made better headway in dealing with poverty and the issues that stem from it, and to do so with a more entrepreneurial eye. And when I started to delve into the reasons why, I realized that it was because we hadn't been able to bring investment to tackle social issues, and today we would say also environmental ones. And so I began to focus in 2000, 22 years ago, on how we could use investment to achieve social and environmental goals. And it's developed now into a mainstream subject. I don't need to tell you at Citi how mainstream it has become. $40 trillion of ESG, more than 2 trillion of impact investing, where you measure the outcomes achieved. Last year alone, from a standing start the previous year, $1 trillion of sustainability-linked bonds and loans.
Yeah, I mean, it's been an incredible journey, right, over the last several decades. And you kind of came across impact investing naturally, being an investor. So a little bit easier of a journey to see how the impact of investment dollars can actually affect change, whether it's through job creation or through specific social and environmental change. And for many of our clients, the journey's been a little less straightforward. in the sense that many of them are not investors and haven't seen it that way. Many of them are business entrepreneurs and investors in different asset classes, such as real estate, where they're not necessarily investing in specific businesses, but they're also starting to see the impact of their business operations, and how, whether it's using climate technology in improving energy efficiency in residential or commercial buildings, or it's thinking about waste and pollution as it relates to their business operations. But there's been a market shift in terms of how they think about their investment dollars, which, and you touched on this a little bit, which historically had been that values alignment, right? The idea of not investing in bad businesses, however one might define that, whether it's religious values or it's personal values that are reflected in an investment portfolio. And that shifted to now where you mentioned the vast majority of investments are in this ESG integration. So thinking about ESG data as it relates to investments. But really, I think, where I want to kind of dig a little bit deeper with you on is the true impact investments. So that 2 trillion number, how is that number expected to grow? And what are those driving forces? And, how are investors, in your experience, you're talking about this every day with a variety of different types of investors, a variety of different companies, how should they start thinking about that as a part of their portfolio? Should it be a small part of their portfolio? Is it something that they can really consider as part of an entire asset allocation? And then, what do the opportunities look like, right? Which companies, which sectors, which industries are really showing the greatest degree of impact?
Wonderful question, Harlin. So I think it's obvious to many people now that their portfolios really should be ESG focused. That if you invest in coal mines or fossil fuels, of course, we have a momentary spike now in oil prices, but the trends are clear. So the decline of fossil fuels and for clean energy innovation to drive future energy sources. And by the way, the Ukraine crisis is going to drive countries to become more efficient in energy terms while respecting the environment and to be self-sufficient, not to be so dependent on countries that can't be trusted to act in a responsible way. So there's going to be an acceleration now of the trend to clean energy, rather than the reverse, as I think some people are saying. So I think ESG has shown us so far that it is a better way of making money than investing in companies that, in my terms as an investor, simply optimize risk and return. Now, the difference between ESG and impact investment, as you were pointing out, is that they both seek to achieve impact, but impact investment measures the impact created. And ESG has been hampered by the lack of transparency on the impact performance of companies. So we see this beginning to change now. In the US, just a few days ago, we heard the announcement by the SEC about mandatory publication of all the environmental impacts of companies, including in their supply chain. In COP26 in December, we saw the announcement of the establishment by the organization responsible for all financial accounting across the world, except for the US, IFRS Foundation, that they're establishing an international sustainability standards board to standardize the measurement of both environmental and social impacts in quantity terms, tons of carbon, liters of water, and so on. And there are big efforts to value these impacts. I'm privileged to chair such an effort at Harvard Business School, the Impact Weighted Accounts Initiative, which is open source. You can all consult its reports and its data sets, where thousands of companies, environmental and employment impacts, appear in monetary terms. So ESG is going to be turning into impact investment as we get full transparency. And by the way, Harlin, my prediction is we will get mandatory publication of an impact statement that shows the revenues, the costs, and the various impacts created by companies through their operations on the environment, through their employment on people, and through their products and supply chains on people and the environment, showing these different impacts in monetary terms, and showing investors who are seeking environmental improvement or social improvement, the contribution that a company is making to achieve this. So if you look at how a portfolio should be shaped today, it really should be ESG with an allocation to impact investment. Now, what are the categories of impact investment that you can access as an investor today? Well, my own industry, the venture capital and private equity industry, is launching funds where the impact is measured, where the business model of the company has impact at its core. The more impact you deliver, the more profit you make. It can be in the field of education, it can be in the field of fintech, it can be in the field of clean energy, it could be in the field of remote health. It will eventually be in every field, because we see a new tech revolution now, artificial intelligence, machine learning, augmented reality, the genome and computing coming together. We see that revolution meeting this new impact thinking and leading entrepreneurs like Elon Musk and many others across the world today to define business models that do good while delivering superior financial performance. So today you can access private equity and venture capital. You can access sustainability-linked bonds, but pretty soon you will be able to invest in public companies, knowing exactly what impact they are delivering. And that 40 trillion of ESG will become, it'll be by then a lot more than 40 trillion, will become impact investment.